Good morning, everybody. It is Monday, December 17th. Stock market getting hit again. Dow, as of this video, down about 200 points. So it's taken a beating. There is no question about it. What I want to talk about here or examine is the often contended theory that stock market corrections precede recessions. And that's really what you should be focused on, because ultimately the stock market will follow the economic fundamentals. If the economy is sound, then this is just a correction and it will reverse itself eventually, probably soon. However, if this is signaling a deep contraction or a contraction in the economy, then stock prices may have further to fall. Now, data has shown, there have been a lot of studies on this, studies that go all the way back to the early 1920s. And these studies all pretty much end up with the same conclusion that in about 66% of the cases, that means 66% of the time, these corrections or bear markets do not lead to recessions. I'll repeat that. 66% of the time, well above more than half the time, these stock market corrections or so-called bear markets do not lead to recessions. They are merely corrections in overbought conditions. And I will go out on a limb here and say that this is one of those times. We will not see a recession. Now, the data that I look at, which is all real time, remember, I focus on the daily treasury statement, and through the understanding of MMT, I'm able to have a very concise macro outlook on the economy. Fiscal support is unprecedented at this time. We are also seeing right now an acceleration in many of the leading bank metrics, bank credit, loans and leases, and particularly commercial and industrial loans, which are really starting to accelerate upward. Furthermore, we don't see, with the exception of last month's very minor slowdown in job creation, if you look at unemployment benefits, they are falling year over year. Now, if the labor market was in trouble and if people were being laid off and signing up for unemployment insurance, you would see unemployment insurance benefits rising relative to last year. Not only is that not happening, they are accelerating to the downside. So fewer and fewer unemployment benefits are being paid out. And that's not just that goes back already, predates the beginning of this stock market correction, which we can label from September, late September, early October, when it began. So this has been a fairly deep correction. It is a correction. It does not portend or forecast or predict in any way a recession as far as I can see. If that were the case, by now we surely would be seeing numbers, particularly in bank credit, in loans and leases, of a significant contraction. The growth rate of some of those bank metrics have been slowing. However, they are still growing, and in some cases, they are really accelerating at a very high rate. If you take commercial and industrial loans now, rising at the fastest pace in over 2 years. Bank deposits rising at a very fast clip. So you have these things which are fundamental to the strength of the economy. If you saw a contraction in bank credit, in loans and leases, that would be a strong indication that things were really starting to slow down. That is not happening. That is not happening. So right now, I'm saying this is a correction. it is going to be one of those 66% of times when it does not predict a recession. We are very near this thing being over. Right now, actually, when you talk about today, there are several individual stock names that are causing the additional selling. You have Goldman Sachs, where the country of Malaysia is filing criminal charges against Goldman Sachs. That's getting hit. You have the Johnson & Johnson story where they were putting asbestos, or they knew there was asbestos in baby powder. Terrible. They knew it. Best Buy, and I don't know who even shops anymore at Best Buy. It's amazing to me that that store, that chain is still in existence. I mean, they've been, battling with Amazon, for as many retail chains have, for a long, long time. Kudos to Best Buy. They're still around, but it's a tough going for them. So, no recession. That is my prediction. Also, on another note, I want to let everyone know, if you were a former subscriber to MMT Trader, I am now offering you this opportunity to come back at your original subscription rate. The rate right now is $195 per month. If you were a subscriber of MMT Trader and you would like to resume your subscription, I am offering you your original rate that you came in at. Just send me an email at mnorman@pitbulleconomics.com. Have a great day, everybody. Bye-bye.